Making money during a high interest rate environment, is it possible? Was it doable? I think it is. And the one thing that I see in today's market, with the higher interest rates, because they're high right now, we ain't gonna lie, they're high. Well, it's beginning to create higher rates of return, right? Meaning that if you're gonna sell an investment property, somebody's gonna get 6.5%, 7% on their interest rate on their mortgage. The return, the yield has to be more than that. So while a lot of properties that are listed are not making sense, we are seeing a lot of properties start to trade, right? Where, okay, now that makes some sense, right? Somebody's making some money because there's not a lot of transactions in the commercial real estate space right now, but the ones that are happening, at least from my vantage point, are making money. My name is Steve Peterson with Infinity Investments, and we talk a lot about commercial investment real estate here. And today's video, I really want to go into navigate, well, how are people making money in today's market? Just give you an example of a couple of recent deals that have happened that I've seen. Now, first of all, our group bought an REO a few months ago that I think is a result of this whole environment. It was an REO, real estate owned by the bank, and we're able to buy it at a significant discount. Now it's vacant, so as we're done with the renovations, we'll be able to get high market rents. So our yield, we're looking at about 8 to 10% cash on cash return, which for the Bay Area is good, it's high. So that means that our investors are going to be making more, right, than our interest rates on our loans. And I think that's the key, is to be able to negotiate and get a deal where you can make more money, right, than the cost of the money. That requires you to find a deal that's going to be a high rate of return. Well, also what I would say, there's a lot of properties that are on the market that are just sitting. They're not being sold, right? I know a couple of apartment owners right now that are looking to sell buildings. They're not selling. But I was talking to one of the clients, and he said, look, I'm going to sell these buildings. What that means to me, when he says, I'm going to sell this building, my buildings, and he's a smart guy, is he going to drop the price to meet the market. And I think that point of meeting the market is where someone's going to make money on the bank's money, or they're going to make money on the hard money's money, or they're going to make money on whatever leverage that they have. Or if they're going to invest all cash into a property and have to deal with tenants, toilets, trash, and city of Oakland, or city of whatever, right? They got to be able to get a higher yield than if they just put their money in the bank. Yeah, JP Morgan Chase and got 5%, right? Because some of these banks are paying 5%. So how do we combat that? Well, there's some foreclosure deals right now. Our team, our brokerage is we are seeing right now in the city of Oakland, there's 232 foreclosures. In the city of San Francisco, we tracked 177 foreclosures this morning. So those properties, either somebody got to get a bailout to get them current, come up with a magic money somewhere, or the properties are going to trade. Either they're going to sell it pre-foreclosure, right, and make some money themselves and get out, or they may lose it. The bank takes over. The bank's just trying to get it sold. Discounts will happen in that space. Deals will happen, but we're kind of in like a holding pattern right now. The Great Recession is different in a lot of ways, but I remember when the market crashed in October of 2008, right? In my office, I was at Sotheby's at the time, from 2008, October to May 2009. I closed a big deal in May 2009, right? It was an apartment building, REO. Man, in our it was a 2-office office. In my office, I think there was like 4 deals that got done, and it was about an office of about 70 people from October 2008 to May 2009. That's a few months, and that's not a lot of deals. I think we're at that point. But then when May 2009 happened, right? I closed a deal. So the guy who's got REO listings start closing. We start getting short sales. That part of the market, the distressed market, started driving transactions. And then people who was not in distress started saying, you know what? Well, okay, I need to do something. And then what happened was buyers felt comfortable, a little bit more comfortable. They weren't real comfortable. Because I remember telling people, you could buy this fourplex for under $200,000 in West Oakland, and people thought I was crazy. And that same fourplex now is over $1 million, right? But at that time, people wasn't as comfortable, but it started to move. And so I think that as we progress in the next few months, I think we'll be in a high interest rate environment in the next year, 2 years, maybe 3 years, at least. I don't know, but we're gonna be here for a minute. I think there'll be more deal flow over the next few quarters. And I think that in order for a deal to happen, ain't nobody paying more than the market price. If somebody's buying a deal, it's got to make money, right? If you're going to sell a deal, it has to be a realistic transaction. You can't. We was talking to a seller earlier who's in foreclosure. We're talking to a seller and he wanted an outrageous price. And we just told him, we was like, look, in a good time, you're not going to get that number. Right now, you're definitely not going to get that number. There's a number where you can sell it though. There's a number where you can walk away from this, put money in your pocket and start over. But maybe we got to go through a little bit of a process to get him and other people to get to that point. And there's other people who are not in distress, but they want to sell, but maybe their number was like what we would have got last year. So maybe it's not quite there, right? However, if they want to sell, there is a number where somebody will buy it, right? That person who's going to buy it has a cost of capital, the interest rate. Or if it's cash, the cost of capital is the opportunity cost of what they can make in the market, of stock market, or what they can make in the bond market, or what they can make and put their money in the CD or something. That opportunity cost, right, has to be less than what we're going to make on this deal. That is the point in which I think we'll see transactions pick up. We're starting to see it right now, but it's still a lot of deals on ice. But I think in the fourth quarter of 2023 is when we'll start seeing more transactions happen at a price point to where the buyer's going to make money and the seller's willing to do a deal, right? Outside of the distress, because the distress market is a small part of the market right now. It's not like it was in 08. I'm going to tell you right now, because I was there. A lot of y'all may or may not have been there. If you was there, give me a comment in the chat, or give me a comment in the comments. Tell me what deal flow was like in that point. But this ain't that, right? There was thousands of foreclosures. There's hundreds right now. But I think that even the non-distress will start seeing more movement in the fourth quarter, regardless of what the rates are going to do. It just, sellers got to meet the market. So tell me what you think about this, y'all. Give me some feedback, man, because we navigating through these times. We're going to make some deal happen. We're going to help some people out who are in distress. We're going to help some buyers make some wise investments. And I want you to be a part of this. All right, to the next video. Deuces.